morning and welcome to Trading with Larry. I'm Eric Shamilov. Larry can't make it today, but we're joined by Clint Brewer. Good morning, Clint, and Happy New Year.
Hey, Happy New Year.
Very interesting geopolitical headlines this weekend to kickstart the year. We're going to be getting midterms this year, and so we have geopolitical headlines kind of penciled in for later in the year. I didn't expect to see international headlines like this so quick, but basically, the U.S. came in, got Maduro out. He's in Brooklyn, I think, right now, a few miles away from where I am, on drug charges. And what an amazing turn of events this weekend. Gold is up, silver flying, although I'm not sure if silver is going to continue going up like this today, but um, oil unexpectedly up. And the markets are so far taking this in stride. And I think this is an amazing kind of situation because it it almost feels like Trump is trying to kill a couple of birds with one stone. Sending China a message, who control a lot of the ports and are trying to gain a lot of influence, and he's trying to solidify the Monroe Doctrine, which wants to make sure the U.S. is the only power in this neighborhood in the Western Hemisphere. And I think they're sending a China message. And at the same time, I think he's also sending Mamdani a message. He's like, look, you want to be you want to turn New York communist? Here's the number one communist for you, and he put him right in the jail cell in Brooklyn, which it's an amazing thing. What do you make of all this?
Yeah, I mean, I don't know. You can come in under the and take him out under the guise of narco terrorism, and yeah, I mean, was there good reason to want to force regime change in Venezuela? And you look at the past, absolutely, but you have to wonder like what's the real underlying motive to go in and conduct an operation like that and do that sort of thing. And a lot of the takes are going to come back to oil. Ultimately, it's probably the best take I saw, and this comes back to what you mentioned with China, and it's that China is the number one purchaser of Venezuelan oil. Venezuelan oil doesn't make up a huge portion of China's total imports. I think it's only around 5% or so. But you still need oil and oil derivatives to power your war machine. And does removing that source of oil give China second thoughts about Taiwan and conducting any sort of action there? Which I think is an interesting take because history, that was go back a little under 100 years or so, and the U.S. was limiting Japan's access to oil whenever sort of the imperialist Japan was going around. So that's there's precedent for that for the U.S. to do something like that. So I think that
Noriega,
was, what's that?
Manuel Noriega.
Yes, I mean, yeah, that too. I mean, so there's precedent for it, and that's probably the best take I saw in terms of what it means for. So that's the longer term strategic view. I think what does it mean for markets right now, as you can see in the reaction. I mean, I think it's the markets are mostly yawning at it. The biggest impact. I think everyone was kind of on edge over the weekend was what happens with oil markets, but I don't think it's oil's up a little bit, but not nothing too crazy. But it's because Venezuela used to be the top exporter in the world. If you go back 25 years, they were the largest exporter of oil in the world, even ahead of Saudi Arabia. But ever
They
since,
hold they hold the biggest oil reserves in the world.
yeah, and they're top on oil reserves. But in terms of what it means to the market, like right now, their production has slowed significantly. Just under these regimes that have been in place, and underinvestment in oil infrastructure and oil infrastructure assets. Like it's slowed to, I think it's only around 1 million barrels per day is their production. To put that into context, the U.S. produces somewhere around 12 to 13 million barrels a day. And so, there's not, in terms of current supply, I mean, this isn't, if this were all suddenly shut out, I mean, it's not a major disruption to the market, especially given what OPEC has been bringing online over the past year or so. And you had coming into this year, the big theme in oil markets before all this happened with Venezuela was fears over the supply glut. You Google oil anytime in December, and it was all about fears over supply glut hitting the market in 2026, just being significantly oversupplied. So, if you take that into account, if that balances out that equation a little bit, I think that's why you're seeing this reaction in oil. And at the same time, you want to talk about the stocks, companies that do stand to potentially benefit from gaining access back to Venezuelan oil markets. It's not like they're flipping a light switch and all of a sudden overnight they're going to be extracting and exporting crude. I mean, there's going to be a lot of work, a lot of logistical things that have to go into making that a reality. So it's going to take time. So the near term impact on the market, I think you're seeing it. It's not much. I think the bigger piece is to think about what are the longer term strategic implications of why the Trump administration would want to do this.
Well, I think you mentioned Taiwan, and I think this sends a big message. I mean, the timing of this was also pretty incredible in terms of the Chinese delegation was literally just in Venezuela. Just solidifying that relationship. Venezuela is the biggest borrower in Latin America. Uh, China's biggest borrower in Latin America. So, I mean, China's influence there has been growing. I don't think the Trump administration likes that. I don't think it's good strategically. So I think this was a pretty big message. I think it sends a message also to a lot of China proxies out there. Like China's reaction to this is going to be really interesting. And you mentioned Taiwan before. If China's going to do anything with Taiwan, I would imagine they would want to do something around the midterms or leading into the midterms because we have 2 year cycles, they have 100-year cycles, so they kind of try to play the cyclicality. And if they're going to do anything, it would probably be around the midterms. This kind of preempts that and kind of puts China on the defense. I'm actually looking for China's response. I think the world is looking for China's response. I think all the countries that China backs are going to want to see, okay, you guys are a superpower. You want to take over the U.S. They just took out your number one piece in Latin America, pretty much. I mean, the story's not written. The vice president of Venezuela looks like she's cooperating, and I don't know what's going to transpire in the short term over there. But I think it's very interesting. And you mentioned Taiwan again, so I think that is a big piece here. In terms of market impact, ConocoPhillips was up 10% pre-market, up 6% now. But what I find interesting, the XLE ETF was up 2% on Friday. The market was pretty weak. I don't know. Maybe somebody knew something with those with those energy
You,
stocks.
yeah. Did you see on one of those betting websites, somebody went in and made a huge bet about like Maduro being removed from power just before the weekend hit? It was on Kalshi or something like that. Somebody went in and so yeah, somebody knew something, whether it was in energy stocks or on some of these betting sites you can make.
Somebody knew something. I think this is a year to really watch poly market like every day for new developments. I think this is a year of, uh, and I thought this, I spoke to Larry about this. I wrote about this a little bit, that this could be a big year for geopolitical headlines that affect the market just because of the midterms. And like I said before, I think if China wants to do anything, Russia, Iran, any kind of adversarial nation, um, they might want to, use the midterms to their advantage. And yeah, I think this is a year where you just want to look at poly market a lot. Um,
Yeah, I think it's a good point. I would so in a way, like poly market and Kalshi, I mean, they're becoming like it's kind of like how you would maybe track order flow and options to look for unusual activity, right? Like you can use option flow to try to track what the smart money's doing at times, because you look for outsized uh, orders. You can tell if something's occurring at the bid or the ask in the options market, you can kind of tell and how that impacts open interest. You can tell if someone's opening, closing a position. You can look at the size of the position, size of that position relative to contracts outstanding to try to determine its significance. And if there's a whale, so to speak, that's trying to position in a stock, or yeah, maybe you can look for the same thing in some of these betting markets. Look for an abnormal sized bet relative to prior bets coming in, and does that tip off to your point? Does that tip off something more significant, especially on the geopolitical side? Just like you use option flows to look for something big to happen in a certain stock. Can you look to these betting markets now to look for inside people acting on insider information on something geopolitical that could happen?
yeah, um, poly market's going. Uh, I is IPOing this year. Is that correct?
That I don't know.
I think that's coming online. Yeah, there's going to be. I think the big IPO this year is going to be SpaceX. That's going to be the interesting one. I saw a funny headline on Twitter or a tweet. It was like, I guess Maduro now knows why Palantir is a $500 billion company. I don't know if you saw that. I found that a little funny. But yeah, Palantir is up in the pre-market, and stocks have been down 5 days in a row leading into today. You have a war headline. That's usually kind of bullish for the market, right? Which is, I guess, I don't know if that's counterintuitive, but I've I always notice war headlines and the market is up. The market is up today.
We'll
What do you
see.
make?
We'll see if it can save the Santa Claus rally. So the whole we're it's unprecedented. So we're the Santa Claus rally runs the final 5 trading days of the year and into the first 2 trading days of the new year. And the last 2 years have been negative. And right now we are currently negative. They're going back to at least 1950. There's never been 3 down years in a row for this Santa Claus rally period. But make what you will of that. It's very short term. Does that really have any bearing on the year ahead? I know there is a saying about if Santa doesn't come to Wall Street during that period, it's a warning on the year ahead. I've looked at that track record, and I think it's a little bit mixed, but yeah, it was a weaker end to the year relative to what we've seen. And I would argue that really since the end of October has really been just a grind sideways for the most part. Especially in a lot of the Mag 7 mega cap AI stocks have just kind of gone nowhere for several months now. And since those are over 40% of the S&P 500, you need those to get some traction to see the indexes get anywhere. But it was overall kind of a weaker finish for the year. It wasn't just the Mag 7 names. It was breadth overall was fairly weak. Again, that's a very short term observation, but there's
Yeah,
one day left to save the Santa Claus rally.
the tech leadership is gone. The question now is, does it return? As that leadership has been fading, and you mentioned the failed Santa Claus rally, volatility has been falling during the same time, which is you look at that in a vacuum that should be bullish, but I don't know. I just feel like the market has issues here. I feel like we had a couple of failed Santa Claus rallies, and you still had a bull market. I think this year you have those midterms coming up. I think we're gonna get volatility. And you look at the implied vol on the S&P 500 at what the levels the levels that they're trading at, 13. I mean, that's the forward returns on the S&P with volatility this low, isn't spectacular. These are levels where you can expect volatility to pick up, and that's where we're at.
You ever trade? Do you ever do any sort of option strategy on the VIX? Would you look to do like a call spread at the when you're down at these levels?
Nah, I hate trading the VIX. I'll tell you why. Just because, like, if I trade the VIX, like, and I was pricing in some VIX debit calls and butterflies on Friday, and I priced one in, that looked decent, and I would have to pay like $3 on a butterfly, and I would need a real nice pickup in volatility to be profitable on it. Well, you could also just sell call spreads on the SPX, and I just as a proxy you compare those two, and I think there's more bang for the buck. I think it's a better trade if you want to buy VIX and you're thinking vol is going to go up to uh, sell call spreads on the SPX. I priced in a 7,200 call spread, for instance. That's 300 points out for February if you think volatility is coming at the end of the month. And it's a better deal to just sell those call spreads 10-point wide, 15-point wide, up at 7,200 on SPX. Now I think there are certain pockets where you can get a lot of bang for the buck trading the VIX, like where when you start seeing volatility pick up, then not in anticipate, like you almost have to like see it first and then you go into the VIX instead of anticipating it. I think is a better trade. So for right now, I would much rather sell upside vol on the SPX.
Yeah, that makes sense. And talking about volatility, I mean, we the VIX gets a lot of the headlines, and we talk a lot about stock market volatility. The one area where I would watch for volatility this year would be in the bond market. I think it's really interesting some of the moves that you've had in certain corners of the world. Japanese government bond yields have seen a major backup. Their stock market's been rising alongside of it in terms of just some of the fiscal stimulus hopes or not hopes packages that are being passed. You've seen German bond yields backing up. U.S. bond yields have been grinding, sideways to lower. If you look at the overall trend the last couple of years, I think since 2023, I mean, they've just been grinding sideways. This is the year that I would start to watch for maybe some bond market volatility, and if that could potentially then spill over into the stock market. And the reason I'm bringing it up as a catalyst to watch this year is because we wrote about this over the holidays, but something like 34% of all U.S. Treasury securities mature this year. So, like, of all the U.S. Treasury securities outstanding, 34% of them mature this year. And it's because a huge chunk of those were issued on a 5-year basis coming out of the pandemic. And so you have those maturing. I mean, it's like $9 trillion that's maturing and has to be refinanced. And on top of that, you have, I think it's 1.7 to 2
Is
trillion.
it why yields have been relentlessly going up?
Yeah, so around the world, yeah, yields have been relentlessly going up. If that's something that pressures valuations too. Like this, given where stock, that's what I'm saying. Given where stock market valuations are at, if yields start to move higher around some of these developments in debt markets and what has to be absorbed this year, if you want to study some history, viewers, you go back and look at the bond vigilante episodes during the early to mid 1990s, where bond buyers pretty much revolted in the face of I think it's the Clinton administration, their spending plans at the time. So if we start to see something like that again, stock prices generally do not like rising bond yields. It's a hit to valuations, and this is another reason why you want to watch this year is because of where valuations are at. I mean, you've got the S&P's 4Ps at 22 times. It's only been higher at the peak heading into 2022's bear market and during the internet bubble. By some measures, valuations are the most stretched ever. And so, you start to look for, maybe this is a tail event, but given, valuations are at a tail as well, there can be an outsized impact from any number of events. But I would really, really keep an eye on bond market volatility again, given that the market
So where do
has.
you? So couple questions. When is that refi on all that debt coming? What month?
I'm not
And
sure off the top of my head what the specific monthly time frames are for that. I just know that it's in 2026. A lot of the stuff that was issued coming out of the pandemic comes due. And the other thing too is that that's going to have to be refinanced at a much higher rate. I'm not sure. Does that imply a lot of that stuff was issued on a 5 year basis back then? But you know, not only is that supply coming to market, but it has to also be refinanced now at a much higher rate. Which again, another reason why, to the extent they can control at least short term rates, why the Trump administration is so keen on seeing the Fed continue to cut here, the pressure on the Fed to cut here.
yeah, I saw March expectations kind of tick up. I think they bottomed out at like 25% probability of a March cut. I think they're closer to like 40% now. Um, yeah, I think. Look, I was. I said it. Larry and I were talking about it. I think this is also. I think especially the first quarter of this year is going to be important for economic releases. Like there are certain times, like as a trader, like you don't like you're looking at the economic calendar and you're like nothing is going to happen, and you're like whatever. You're looking to fade the reaction if there even is one. Like most of the time it's like muted unless it's like a big report. But I don't know if you got into the Fed minutes last week. I think they're all looking for new data, especially that now that we're out of the government shutdown. So the quality of the data improves, and they're kind of like looking at it to validate what their monetary policy was in December, which was to cut rates and to kind of set their policy moving forward. So I like most of the time these indicators don't matter, but I think these upcoming releases this month, you're going to see some action in the market. And who knows, maybe finally we get some currency vol. I mean, that's been hard to come by, right? You guys have a currency product. Maybe it'll be a lot more active this year. Was it active in 2025? How'd you guys do with the currency product?
We did okay. We closed out the last trade we had right at the time. We were all down there in Florida, so that was a long euro position. We closed out for a gain, and that pushed us into net positive territory on the year. Yeah, but last year was tough for trading currencies, especially in the second half of the year. I mean, we currency volatility, like you said, was just non-existent for certain stretches. The first half of the year was pretty good. Second half of the year, similar to the stock market, we just didn't have a lot of volatility to help with those moves. So we'll see. I mean, the dollar's getting a nice bump off the weekend headlines so far this morning, up about 40 basis points, I believe. The euro's trading weaker, so we'll see. Yeah, it's been a prolonged period of not seeing much movement, which we've slowed our activity trading currencies because of that. Again, it was nice to pull that nice one out, the last one out for a win and push us into positive territory on the year. And now we get to start the new year fresh.
Yeah. Speaking of currencies, if you consider Bitcoin a currency, that's up really nicely today. Now trading above the 5 and 8 day moving average. I like that. It's got a little bit of short term momentum here. What do you think?
Yeah,
You guys,
I like it. Like here, I'll try to share my screen really quick because I actually had Bitcoin pulled up here.
Maybe MSTR finally starts to come back.
And that thing's been a disaster. All right, so Bitcoin. Here's the levels I was watching, and key levels you need to watch this week. What I thought was interesting. So back in November, initially, is when we came down to test this 84,000 level, and I'm highlighting that because that was around the extent of the pullback into the trade war. So that was price support to be aware of. And we put a long trade on Bitcoin via calls, and we still have that back as this was happening. Then this just we didn't really go anywhere. We came back to test that level again, but what happened was you had a positive momentum divergence on the RSI. So the RSI kind of point to point testing that level again, making a higher low. So that was one hand of a turnaround. We're finally starting to see that play through more
That
this
took a
morning.
while to develop. That took a while. That divergence there with the RSI, like you see it coming, right? Like it's hard to trade it right away.
Yeah.
Like you see it coming. I think it should kind of like uh, turn on the light bulb. Like maybe downside is limited here, right? Like when you see that divergence, how do you play it? Do you jump right in, or are you like,
Yeah, I mean,
okay,
so it's just I would say it's just one of the things to look at. I mean, you don't want to hang your hat on any one single technical indicator. At the end of the day, I think the fact that it's another positive confirming indicator. The initial indicator was the RSI getting extremely oversold. I mean, I think this was one of the most oversold levels of the past like 3 or 4 years. If I were to bring this back, at the same time, we went back and did some studies. You usually don't see Bitcoin. Once it starts to get this extended below the 50-day moving average, which is the blue line, that rarely doesn't last that long. That's when you start to see those. So we're looking for, as a short-term reversal trader, we're looking for the conditions to deliver one of those snapback rallies, or if things get too far extended to the upside. Well, this was the evidence that you're getting too far extended to the downside into position for a reversal. Then I would say what happened next was a nice confirming indicator that reversal was developing. That was the positive divergence then on the RSI. So I would say the initial take was how far below we were under the 50-day on a percentage basis, and how oversold this RSI was. Now you've got this positive confirming indicator. Now what you need to watch this week is we're right back at the 50-day moving average. So nice rally in Bitcoin this morning, but big picture, it's taking us right back to the 50-day moving average. And so, it would be, I think it would be a great signal if, as you can see here in the past, when we've had these other recent crossover events above the 50-day, that's produced a nice uptrend.
yeah, I look at it a little bit differently. I love the RSI on a daily chart for stuff like currency, for Bitcoin. I love that. I think it works really well, actually. Like the way I look at it is, it doesn't tell you anything fundamental, but if you don't think Bitcoin is going to zero, okay, uh, or cut in half from here, and you see that RSI start to get into oversold territory, I mean that's the spot where you want to take a shot. For me, the 50-day, the longer term averages in Bitcoin, in crypto in general, tend not to matter at all. Like I'm a big proponent of Bitcoin still needs momentum to survive. It's like air, for Bitcoin. It needs it. You need air to sustain fire. Bitcoin needs that momentum. And so I look at really short term moving averages like 8-day, 5-day on the daily chart. And right now that's 88,000. So now Bitcoin is up this morning, right? So I don't want to like just buy it. But if it gets down to like 92, which is not too far from here, I could take like a little bit. 91, 90, I'm a buyer. And my stop is below 88. Pretty small risk. Um, Betting on sustained momentum, short term momentum. And I'm looking at Coinbase here and trying to price in like what. How do I play Coinbase here? It's been killed. It's trading at like 245 pre-market. I'm sure I price in those options in the AM when the market opens up. I'm sure there'll be some pretty fat premium somewhere around like 215 for about 2 3 weeks out. 220. I'm probably going to be willing to sell some put spreads down there on Coinbase for the time being. So I think there's some opportunity in some of these crypto related stocks this morning. I wonder how much of this is related to Venezuela. It's weird. Bitcoin like has geopolitical risk premium. Sometimes it doesn't. It's weird. Like it has like safe haven qualities. Sometimes, like it kind of you
I don't
can't kind
know.
of.
I don't know. I don't know. Like if I, I'll call my equivalent of a Larry timeout on that one because I can't really see how Bitcoin, you know, it, everyone there's all these proponents about Bitcoin's an inflation hedge, and now you're talking about geopolitical, but like there hasn't been any like consistent correlation that I've seen to be able to say that. I mean, you would have given. I mean,
Well,
okay,
that's what I said. It's you can't really pin it down to like sometimes it has safe haven appeal. Sometimes it doesn't. You can't. It's not like it's not consistent.
yeah.
Like
Well, I
gold.
don't. I mean, but how do you tell when it matters and when it doesn't? I mean, I feel
Yeah,
like
I
I feel
can't.
like it's people come along and try to prescribe whatever the narrative is at the time driving Bitcoin. It's like, okay, well, Bitcoin's up today. What's happening in the world? We had stuff in Venezuela. That must be the driver. I mean, it always comes back to the narrative as it does with anything. But what I'm saying is like there hasn't been any really consistent thread behind Bitcoin to explain its movements, and so I don't know. I mean, the way I look at it, and the way I think Larry looks at it to an extent, is that it's just any other risky asset that you can trade. It's susceptible to the same fear and greed and mean reversion type characteristics that impacts pretty much everything from stock prices to currencies to oil. I mean, things are subject to investor emotions, investor overreaction. Things get pushed too far in one direction, and they tend to snap back. I mean, that's just a characteristic, a hallmark of so many markets out there, and Bitcoin being one of them. But I just, for everyone that's, I where Bitcoin lost a lot of credibility for me for people chirping about Bitcoin as a store of value or an inflation hedge or protection against deficits and debt. Like what it's done nothing relative to what gold and silver have done this year. So like does that how do that's what I would come back to. Like how do you explain if Bitcoin is truly this especially looking at it as a store of value, how do you explain its movements over the past year relative to what you've seen in gold and silver?
Liquidity.
That's why I just like it's just
Yeah,
the narrative always shifting on what's the value,
yeah.
what's the underlying value of Bitcoin, and what's the driver of its performance.
I think the driver its performance is probably over 50% liquidity. At this point in its evolution. Last year topped out when liquidity just started to dry out. It was actually like a canary in the coal mine. Like that was the first one to start to fall late October. Then Nasdaq stock started to underperform. Then everybody started talking about lack of liquidity. So Bitcoin was the first one to signal that. So I think a lot of Bitcoin has to do with liquidity.
I will give you
And
that. Yeah, I will give you that for sure. That's something we've noted and we've written about with Larry's e-letter before. Is that you tend to see a peak or a trough in Bitcoin before the rest of the market. I mean, Bitcoin rolled over before the S&P into the trade war sell-off. It bottomed relative to the S&P in early April, made a double bottom, and it peaked in early October before the rest of the market. So yeah, that is one area where you should pay attention to Bitcoin um, as a leading indicator for what the indexes tend to do. You've seen that pretty consistently.
So Friday was a fifth day down. Did you guys put on any positions? Interesting stuff.
No, we were on break at that point. So now we're for everyone watching, we're officially back this week. So we had a 2 week hiatus.
Okay. Everyone's back at market wise.
Everyone's back. We did do one trade over the holidays, and that was to close out our USO calls. So we had a nice gain on those for subscribers and one ticker trader. So we took that, and other than that, we've been pretty quiet, but ready to get back at it this week.
All right. So it's 9:05. Let's take a look at the market. It's up 30 points or thereabout. I think that's going to set SPX to trade around 68 68.90. I think is the um, indicative open for the SPX. Just want to check in um, on the straddle for today at 65.90 and 68.90 rather, and that comes out to 25 points. So we have a 25-point straddle here at the open. Looking like I think I might want to put on the Iron Condor here.
On board.
Small position. What do you
Yeah,
think?
I don't, I think, yeah, I think today, um, maybe we see a little bit of upside, just given what you pointed out. I mean, we've had 5 down days in a row. What I would watch for, I'd look for a pretty muted reaction. I'll be curious to watch some of these energy stocks if there's a reversal off the open. I want to see if a lot of these energy stocks can hold their gains coming off the weekend. That'll be very telling on kind of the market's take on the importance of what happened in Venezuela. But then, today's pretty quiet, but we got a lot of events this week. It's been a pretty quiet 2 week stretch, but coming up first this week that I think you'll want to watch are the ISM reports. So we've got the ISM manufacturing and services PMI coming out. So just keep a close eye, especially on the new orders and prices paid components within those. New orders tends to be a leading indicator of economic activity, while prices paid tends to lead inflation. So we had a big spike last year in prices paid. They've, I think, come in a little bit recently, so watch those trends. But then, the big event on the week is going to be the payrolls report on Friday. So to what you were saying a little bit ago about the Fed's minutes becoming more data dependent, I think just given where we are with interest rates and the outlook for monetary policy and wanting to see, kind of those data driven decisions, that the payrolls report is. They always, it always feels like it's like the most important payrolls report ever. This one will carry some significance as well, but yeah, those are the events.
Yeah, I think these reports are going to carry a lot of significance. I think the Fed is going to scrutinize them pretty heavily and weight them pretty heavily in their decision making. Again, because the quality of the data that they've been getting has been pretty bad because of the government shutdown. Now they're getting cleaner data, and that they explicitly said that in the minutes. Um, so yeah, silver's kind of ripping here, which is interesting. I'm looking. Silver backwardated curve. Obviously, there's supply issues, but day over day, I think there's like a safe haven bid in silver today. The day over day forward curve in silver is actually kind of flatter in the back end, which is actually bearish. You got silver up a lot. Could be one to watch to the downside here a little bit.
Yeah,
Uh,
the one thing I would watch on silver, if you go back and kind of watch silver's characteristics and what it likes to do, a lot of times it'll make these bullish pennant, not even bullish pennant patterns, but just pennant patterns in general, where you get these really, just a multi-day or maybe over a week or two, where like the price range just really kind of gets compressed, and that's what we've had off of. It felt like a blow off top right around Christmas. But really, since then, we've had a number of inside days, and those inside days have been getting tighter and tighter on their daily range. And today, if you were to draw a trend line off the close on the peak in silver, today's action would be breaking that to the upside. So it'll be interesting to see if that can spark. You see that pattern a lot with silver, looking back historically. So we'll see if that pennant pattern produces another little quick burst of upside here, but which I think you really need to watch silver between 80, 90 per ounce, because that was, we had a really big reversal off that level, that where we had that massive intraday move, was on the 29th of December. So that'll be a key area to watch, I think, then for silver, if we can start to try to move out of that pattern.
I'd like to buy it at 66, $10 lower. It could get above 100. The economics of solar panels and the way that they use silver in the data centers and solar panels. I mean, if they try to uh, get into copper as a substitute, that's years away. Silver's probably one of the most inelastic commodities out there, for what it's used for. So it could run up. It could run up, and there's nothing anybody could do about it. But let's see, silver also likes to fake out technically a lot. So, you know, we will see. Interesting. You think this gap? So we have a gap up today, right? You think the market is going to try to close that gap at some point today, or at least threaten to do so?
I wouldn't be surprised to see the market come back and try to fill that gap. I think it's interesting is that you got the S&P up, but last time I looked, like the Dow and the Russell 2000 were a little bit weaker on the day. So I think that's a little bit telling. If we've got very narrow leadership at the open, if maybe watch AD ratios at the open, if the breadth isn't that good, I think that increases the likelihood that you come back and see that gap fill. Along those lines, I would watch to see if a lot of these energy stocks, and you can watch XLE or XOP, if energy stocks are going to fade the move off the open today. They've already faded. They were up a lot last night at the open, much more than they are
Yeah,
right now. So we've already seen that come in.
COP is already fading. Last time we mentioned it, I said it's up 6%. It was up now 5. So ConocoPhillips, that's the big one I think associated with Venezuela. So that's definitely one to watch on a fade. I mean, you would expect a fade. I mean, like, okay, let's say Trump gets all these energy companies in the door, and he's saying they're all lined up. They want to do business now in Venezuela, which look, they have a lot of oil, and I know they all want to get in there. These projects are so many years away,
Yeah.
and their infrastructure is so beat up. Like it's going to take a while. So this is kind of something to watch for a fade, I think.
Yeah. Yeah, I would watch. So, kind of what I would look for today is what you talked about with the S&P and the straddle. And if we potentially come back to fill that gap, that's I would watch that on a very near term basis. I would also, what we talked about earlier, I would keep a really close eye on Bitcoin at this 50-day moving average, and if it can keep building momentum off of that RSI divergence, given that Bitcoin tends to be a leading indicator for risk sentiment, that's where I've consistently seen, Bitcoin producing signals has been a leading indicator on risk sentiment for the stock market. I think a cross above the 50-day would be a very positive development, especially given that the equity market really hasn't been able to go anywhere in the last couple months. So those are things near term that I would keep an eye on right here. I also keep an eye on Tesla. We'll see if there can be some. There were some pictures coming out over the weekend. Musk and Trump having dinner together. So maybe that relationship is back on the mend, and that maybe has some positive implications for Tesla stock. But Tesla had on the last trading day of the year, or no, on I guess the first trading day of the new year, Tesla had a huge reversal, just a big negative candle that took out the 50-day moving average. So that's one I would keep an eye on, especially too because that took the RSI. Here's another way to use the RSI. That took the RSI back down toward the 40 level. Tesla stock has not seen the RSI go below the 40 level pretty much at all since April. So when you've got, and Tesla's been, big picture, Tesla's been in an uptrend since then. When you have a stock that's in an uptrend, a lot of times you'll see the 40 level in the RSI serve as oversold. Conversely, if it's a stock in a downtrend, you'll see 60 serve as overbought on a bounce. So we've got Tesla taking out the 50-day moving average, but you've got the RSI back now down to close to 40. It's had a pullback off the 500 level. If there's more headlines over the weekend that can drive a stock, we'll see if the stuff around Trump and Musk can spark a turnaround there, I guess.
Back to the RSI. Do you ever play around with the look back period? Like it's usually set at 14, right? That's your default. Do you ever play
Yes.
around with that? Do you ever look
Yeah.
back?
A lot of times,
So when
some things. Well, yeah. Well, so if you're especially, I mean, that's the thing with a lot of technical indicators, right? You want to understand what that indicator is measuring, and then how does that fit or become a tool in your toolbox for your trading style, and then you want to align it with your time frames. Like if I'm jumping in and out of a trade day to day, if my holding period is measured in a day or a couple of days, it doesn't really make sense to use the RSI on the standard look back period of 14 days. You'd want to tighten it. And same thing with like moving averages. If I'm a very short term trader, it doesn't really make a lot of sense for me to use the 200-day moving average, or maybe on a day-to-day basis, you can watch for crossovers of those levels. But again, you want to kind of align yourself with your holding period with the technical indicators that you use. And yeah, we'll some things I'll look at with Larry. We'll shorten things up on the RSI. We've got a template where we look at the use an 8 period look back instead of the standard 14.
Yeah, I do that as well. I mean, my method is much simpler. You put it on a daily basis. If you see the thing never, or being too wild and being oversold, overbought way too many times, you should expand the look back period a little bit because, like, at the end of the day, you're just trying to find the information you're looking for is it overbought and then is it oversold and whether that is starting to diverge from actual price. So, if it's too noisy, you try to get it a little bit less noisy. That's my way of doing it. So it's 9:18. Market is opening up pretty soon. At the high of the move from the overnight session, uh, looking to climb back, looking for its first big up day on the year. Straddles at 25. I'll give you the last word. What are we doing today?
Yeah, I mean, look, Santa's potentially a no-show for the third consecutive year in a row. He's got one more day to try to save it. Three years in a row of no Santa Claus rallies, unprecedented. So we'll see if he can come through today. Big picture on the risk sentiment side. I would keep a close eye on Bitcoin here. Go back to the Bitcoin chart that we showed and watch Bitcoin around this 50-day moving average. If we can start to see a sustained move above the 50-day, I think that signals a broader positive risk on sentiment for the rest of the market. If it gets rejected here, that's a warning sign on the other side.
I'll leave it off with I think 68.50 today is well supported on the SPX and looking for an opportunity to sell 69.20s on the SPX for some premium. Might need a little bit of an uptick for that, but biased towards a range about 68.50, 69.20 if you could get premium up there. And that's it. Clint, great talking to you. Happy New Year.
Happy New Year.
And good luck at the opportunistic trader this year. Hope you guys kill it.